Sure that the mic is on, should be on. Double check. Perfect. So we're good. Welcome back. Today is October 10th. Thank you guys for watching. I figured I might just run back an aha moment part two. I think that the last video, YouTube video, aha moment was a looked like it was interesting for most people. So I'm gonna run it back. This is a part two. Um, like, comment, subscribe. Let me know in the comments what you guys are interested in me discussing or talking about. And I am more than happy to share that stuff with you guys. I just got back from the doctor's office. I did my annual physical just now, but uh I hate those, but gotta get those done. Glad that's out the way. All right, so aha moment part two. In this video, I'll explain things that I probably didn't share last video, and I'm sure you guys are gonna learn something from it. If not, then you guys are most likely um already profitable. But if not, or if you are even profitable, I think this is still gonna be something interesting for you. It's never even for reassurance, like even if you know something. I think it's always a good idea to reflect on old ideas because sometimes you can lose yourself. Sometimes you can um, step away from the straight line. You could step off of the straight line. It's always good to just rewind and, get back on track. So, this video is also going to be good for people who pretty much this already is, people already know exactly what I'm going to, talk about, and why the things that I talk about are important. So let's see. First things first. Let's go ahead and just break down. Let's start with TradeZella. So I'm gonna share my screen so that you guys can get an idea of how this past week looked for me after I show you guys this past week on how it looked for me. Um, I'll go over a few things that I look out for so that you guys are aware of how to approach the market. If you don't already, have a strategy on how you approach the market, I'll show you and share my ideas on how I approach the market. Everybody approaches the market differently, but excuse me, I want to, just share the ideas that I have. And then if you guys are more than happy to comment on the ideas that I share, I'm always open to having conversations, especially about trading. Um, with anybody, honestly. I'm like I don't know. Let me see. All right, so here is, let me delete these tabs. Couple tabs open that are not necessary. All right. All right, first things first, we're gonna hop on to tradezella.com. So here's my TradeZella. I'll refresh it. Again, I haven't been showing dollar figures. I've been more focused on percentage because that type of framework, that mental framework of just thinking more in percentage rather than being so caught up in the dollar figures, it's more mentally helpful. It could also be financially helpful for you as well. So that is my take on the difference between, focusing on dollar figures over or focusing on percentage rates. So I think it's more helpful again to look at things in terms of percentage rather than looking at them in dollar figures. In my personal opinion, I feel that looking at dollar figures more than looking at percentage is more of an emotional, you might find that you have a more of an emotional attachment. So that's just in my opinion. And that's, I think you can think more objectively when you look at things in, as a percentage perspective rather than a dollar figure perspective. So that's my take on that. Now you can see that profits start significantly going up. Ooh. I'm not gonna say day by day, but week by week. So let's take a look at this first week that I opened the account. So you can see we're gonna calculate this together, right? So we can clearly see that, let's say I'm gonna do this on my phone. We've got, I'm gonna just start off with Thursday's profit, which was 3.09 and then minus 1.12. So this initial week, I was almost up 2%. It's actually 1.97%, right? The next week, I'm gonna write this down actually. Here, I got my notes app right here open. So first week profit is 1.97, all right, percent. And then I'm gonna put second week. So second week, let's take a look. We're gonna start off at 5.63. What I'm gonna do for you guys is I'm gonna add the profits and then I'll deduct just to make it a little bit easier. So 563%, right? 5.63%. And then I'm gonna start deducting. So that's 1.61, which is a losing day, equals 4.02 minus 0.02, right? And then minus 1.02. So now we're at 2.98% for the second week. So that's 2.98%. And then the next week, we've got this most recent week, right? Or actually, that was last week. Either way, we're going to add these percentages first. So that's 2.21% plus 1.99 plus 8.49. So 8.49%. That equals 12.69. And then we're gonna minus 4.27. So minus 4.27 is equal to 8.42%. So this is the third week. Third week is 8.47. All right, and then this most recent week, right? This past week that we just had, today's Friday, right? Friday, October 10th, 2025. So I'm gonna add these together. So 3.24 was on, a good pace for this week. Um, up until Friday today, which it's not bad. But so 3.24% plus 0.78% plus 0.08%, right? Is 4.1. And then we deduct what we lost today, which is 2.16. So that's 4.1 minus 2.16. That is equivalent to almost 2% this week. That's actually 1.94%. So that's going to be fourth week is 1.94. And since I opened up this trading account, I'm gonna start I'm gonna start adding these together so that we see the overall trajectory on how much what percent I've made over the past 4 weeks. And that's right, that's a month. So over the past month on this trading account, that's 1.97 plus 2.98 plus 8.47 plus 1.94. That's 15.36% in the last month. So now let's take a look at how that would look with let's just put this into perspective because I think this isn't emphasized enough in the trading space. When you start to look at things as they are, right? If you look at things as they are, which is looking at them objectively and not emotionally, just strictly objectively as a I think it's called quantitative or quantitative, something like that. Quan, it's how hedge funds, how do hedge funds understand the market? Is it quantitative? I think that's it. Understanding quantitative analysis. Yes, many hedge funds. Okay, so look, I just looked it up for you guys really quick. So, how do hedge funds understand the market? Let me just make sure that the screen isn't frozen because sometimes the screen freezes. I just want to give you guys some value so that it just free value so that you guys can understand how these numbers are. How can I like, how do I see, um, like what screen I have sharing? I just want to make sure. Okay, it looks like the screen is actively being shared. Okay, so what did I type again? I don't know where it went, but I'm gonna just refresh it. Okay. So how do hedge funds understand the market? Is it quantitative? I think that's how you say it. Hopefully it is. Yes, many hedge funds use quantitative analysis, but they also use qualitative methods. Quantitative approaches involve mathematical and statistical models to find patterns and opportunities in large data sets, often using computer algorithms to make rapid, objective trades. Qualitative strategies, in contrast, rely more on subjective judgment, in-depth research, and human expertise. So it kind of makes it sound more difficult than it actually is. So the to put this into, simple terms, if I the basic, the basic skill that these hedge funds are likely um modeling is a good, risk management skill, and also they are they're likely taking a model where if the model presents itself 100 times, how often does this model become profit? How often is this model profitable long term? So even though, if this model plays out 100 times, what's the likelihood of you being profitable long term if you only take this move every time it shows up over and over and over again? So that would be something that is likely going to be considered qualitative, as a qualitative strategy. And while you're modeling a qualitative strategy, you're most likely going to want to, uh, this is something that I always preach, have at least a risk to reward that makes sense, right? You don't want to have a one-to-one, because having a one-to-one risk to reward means that, you're risking maybe $50 for another $50. So if you win, you could have, or I did 500. You could have an extra $50. If you lose, you can have negative $50. But you want to focus your attention on strategies, or I can't tell you exactly how to look at the market, but um, I can tell you how I focus on the market, which is not a one-to-one. I don't focus on strategies that have one-to-ones. I focus on models that give me at least a 1 to 3, so that in case I am wrong one, two, 3 times in a row, all it takes for me to be profitable once is a 1 to 3 playing out, right? So the way that that would look is realistically, right? I'm risking, let's say, let me change that color again. I'll just change it right here. The way that that would look is, I'm gonna do green. All right, so I'm risking the same $50, right? It's the same $50 that I'd risk, but instead of risking 50 for $50, I would risk 50, and then this is going to be the ratio. So 50 for, guess how much? At least $150. So I am, let's say, I have one apple. If I have one apple and let's say I ate this apple and this apple gave me a seed, right? It has a seed inside of it. I'm gonna take the seed, go ahead and plant it, and then the seed is gonna either not going to grow anything at all, or it might give me three apples in return, three apples at least in return. So I'm willing to sacrifice this seed in order to gain at least three apples in return. Oh no, that's the only thing that just came into mind. Maybe there's other analogies that you can think of, but as of right now, I don't know. I don't know. Maybe I can ask ChatGPT. ChatGPT, give me an example or give me an analogy for a risk to reward of 1 to 3 so that I can compare it to the market. Let's see if it comes up with anything interesting. The market as a casino table you built yourself. Every time you place a trade, you're putting $1 on the table, your risk. You know what? Let's do one that one that is more simple to understand because that one was kind of difficult. Started mentioning the casino. hmm And imagine you're flipping a coin with a friend. Every time you lose, you give them $1. Every time you win. Oh, okay. This is a good one. Okay. Coin flip. Let's do this. I think I did this on one of my videos before. Okay, so this is Google. Let's just imagine Google's your friend, right? Now let's say every time I'm on your team. So it's us against Google. So every time Google flips, let's pick, right? We're gonna pick. It says tails. Let's pick tails. Every time tails is the coin flip, um we gain $3. Google will send us $3. But if it's heads, we have to send Google $1, right? So, or I mean, we can start off, we can just keep it at 50. So let's do $50. If we get heads, we have to send Google $50. If we get tails, then Google sends us $150. Pretty simple. So we got $50 on the line, right? I'm gonna do flip. Boom. We owe Google $50, right? We are negative $50, right? Flip again. Boom. We're negative $50 again. Now we're in the hole for $100. We need one more to be profitable. We just need one tails. Look, we got a tails. We're profitable. Boom. $150. This is simple information that people are not being told in the trading space, unfortunately. And because people a lot of times are not financially literate and their risk management is way off, and mine personally has been way off for the last few years that I've been trading, and it's been about 6 years for me to understand this, unfortunately. I felt like it was just this magical trade that would make me profitable long term, and that's obviously unrealistic. So I think that sharing the realistic ideas in the trading space is going to be a big opportunity for many people to become independent. I feel like independence is something that we should all have. We should be able to take our sovereignty back, and this is the best way to do it. Because once you know how to become profitable long term, in the markets, like you can probably trade almost anything and be long term profitable. With an exception to like the whole rug pulling business and stuff like that. I think focusing on things with that has proven value and is already being algorithmically algorithmically traded, it's a little bit easier to understand the direction long term of markets, right? Most likely, a lot of people nowadays understand the direction of the S&P 500, for example. Usually, it's in the uptrend long term. Gold obviously has a lot of, um, excuse me, bullish directional bias for us long term. Nasdaq clearly, which is a reflection, typically a reflection of the S&P 500, and then US 30 is also it also gives us a lot more bullish, virtually a lot more bullish direction um as well than bearish direction signals. So as you can see though, again, right, I am profitable right now. If you add these up, we're gonna get a profit of $50. So I'm up $50 just based off of these three different uh opportunities that I was given with Google, right? And then let's say we do three more. If we do three more, how does this work? Tails again, right? If this is tails again, this is a 1 to 3 risk to reward. So now we're adding 150 to this, let's say I took three trades yesterday, right? Thursday. Today's Friday. I took I'm taking three more trades, right? And it's Friday today, which is Friday. This is gonna be $150 positive. Um, so this is my balance, right? I'm gonna put BALANCE balance equals 50. So that we know where we're at. And then so this is one. I'm gonna do a second flip for Friday. Tails again, right? We got 150. And now, even if we get a heads, we're only down $50 after today, but we're up a lot. Look, we got three tails in a row. So that is 150. Now we add all this up. What do we get? Let's see. This is probably like one of the most underrated videos on YouTube, I swear. This is $450. Does anybody understand the compound effect in this? Do you see it now? Do you get the picture? You do not have to, it does not have like win rate, it's cute, right? Win rates are cute, but your risk to reward. This is why my Instagram account is ant R2R. It's ant R2R. It's not ant R2R for no reason. Risk to reward. What are you willing to risk and how much is your potential reward? This is one of the most underrated videos on YouTube. I can guarantee you that right now. So this is the way that I personally look at the markets, and I think that this is the best way to look at the markets. Um, but a lot of people, they're gonna still froth at the win rate. You do not need a high win rate in order to be long-term profitable. You just don't. And this is on a bad day. This is on a bad day. What I mean by bad day is aiming for at least a 1 to 3. Aiming for trades that give you at least a 1 to 3. This doesn't even account for the 1 to 10s that I sometimes get, or 1 to 8 risk rewards that I sometimes get. Like, is anybody getting the bigger picture now? Do you guys understand why I'm just pushing out free trading content is because I don't look at the market any other way. And there's not much else that I can even, right, teach. Like technical analysis is good and all, but if you don't understand this, but you understand technical analysis, then you're still gonna dig yourself into a deep hole, and you're not going to be long-term profitable if you don't at least get this picture here. So at least understand risk management. Strategy is good, but if you don't know how to properly manage your risk, then you will not be long-term profitable. There's some people going, there's some people willing to risk $50 for $25. Like that's the complete opposite of the mentality that you probably want to have. Imagine risking $1 for 50 cents. Like that's pretty much what these people are doing. Especially if you're taking profits early. Like that compound of a mentality long term is probably not going to end up being good in your favor. I'm just being real. But this is how I look at the markets and this is my aha moment. Um, Hopefully this also resonates with you. And these are the type of trade ideas that I share in my Discord. So if you're open to, seeing the breakdowns and seeing what type of trades I take on a weekly basis that are at least 1 to 3 risks to rewards, unless it's like a C plus trade, then join my Discord. My free community link is in the description. Um, I'm sure you'll learn a lot from it. I also post in there like market structure and ideas and stuff like that. And how you should probably look at the market the way that I do, at least. Um, could definitely, yeah. So, I mean, that's what we're looking at in terms of, the type of profit over the past 3 weeks. And again, the type of profit we're looking at is a 15.30% um profit. So, uh in the past 4 weeks. That's perfect, right? Investors a lot of times they're looking to get at least, I mean, they're comfortable around 5% or 6% per month. This is, if it's 5%, this is 3 times the amount that investors are looking for. Um, let's see, let's take a look at what's is the average percent investors want on their money per month. It says investors want to see a substantial monthly return, but what is considered average varies. A 10 to 15% annual return is a common long-term goal, brother. However, a more conservative and realistic long-term average return for investors is closer to 7 to 8%. This is disgusting. Keeping up with inflation, um, keeping up with, what is it? We have inflation and then there is the devaluing of the dollar. So as the dollar goes down, and these two things are not the same, the dollar going down in value and inflation, those are two different concepts that we're having to tolerate. We can't escape from the dollar devaluing in the US. You also can't um run away from inflation. You have to take these things head on if you want to be long term successful. You have to understand these concepts and a lot of people just don't want to admit it, right? A lot of people are investing into the S&P 500, but then again, long term, what is it? You might see what's the average what's the average ROI on the S&P 500 per year? It says over the long term is about 10% per year before inflation and around 7% per year after adjusting. Okay, so look, I'm gonna ask ChatGPT. Um, After the devaluation of the dollar plus inflation, how what percent do you really make on your investment for the year? Let's just take a look at this. What we get as a response. Okay, so it just gave me an example. It says if your portfolio grows 10%, but the dollar lost 4% of its value that year due to inflation, your real gain is 10% minus 4%, which is equal to 6%. So your $10,000 became 11% nominally, but in terms of purchasing power, it's really worth about 10,600. So 10,000 to 600. Real ROI on the S&P 500 about 6 to 7% per year. That's the true wealth building rate once you adjust for inflation and dollar devaluation. Bro, just think about that. How is that even helpful? Like, people preach so much about investing into the S&P 500 as a long-term solution. What about swing trading the S&P 500? How does that sound? Because it feels like we're leaving money on on the table if we're just investing into it long term. For you to just get anywhere between maybe 6 or 7% per year, that's less than 1% per month. What are we doing? Has financial literacy just been removed from like everywhere? I think I don't know. It's either I'm losing my mind or I just found it. I don't know. But I'm glad we were able to go over this perspective and hopefully you see the bigger picture because I hope I'm not the only one. Feels insane. Back to trading view. So I'm gonna just quickly go through what we're gonna start seeing. Um, yeah, I'm gonna quickly go through what I'm gonna start expecting over the next week or two or 3 or 4 or 5 or 6 um in these different pairs because we started having a sell-off. My most recent loss that I took actually today was in the S&P 500. Unfortunately, if only we had a actual eraser that I could just scrub across the screen instead of constantly clicking back and forth. Oh, all right. And we're still dropping. Like, isn't this insane? Like I was in right here. It was a 1 to 4 and boom. This is nasty. This is wild. I'm not gonna lie, this is wild. All right, whatever. I'm gonna just delete this. Honestly, just delete everything. Start from scratch. So we got the S&P 500. Once it closes, we're gonna most likely, I would picture this as bearish. I don't really understand the legality between like me actually confirming what's bullish, what's bearish, and stuff like that on YouTube because this is a public thing. I'm just gonna give you guys my perspective on the markets. Um, so look, it's what? It's almost 5 o'clock. I mean, clearly we're gonna close somewhere down here. What I would do is just look at if we wanted to effectively retrace around the 50% mark. I mean, daily time frame doesn't exactly point out any key areas of interest, any key levels. So I would drop down to the 4 hour. And then I would just look at where the market has recently been on the 4 hour time frame, kind of been stagnant about 3 or more times. And it seems like one, maybe two, three, 4, 5 times. the market seen this as a resistance level. So I'm gonna just highlight this real quick and put 4 hour key level. It's also within a 4 hour imbalance. This unfortunate what is it? Alert signal that I had placed above where I would have taken partial profits didn't get triggered. Instead of me deleting it, I would just move it down to this area of interest, expecting for price to pull back into that area. And if it doesn't reach there, I'm not gonna get in. If it does, I'll start looking for opportunity. And then obviously I'd be looking to somewhat short the market, take profits here, and then let the rest run. Um, hmm. I mean, that's what I'm pretty much looking at for S&P 500. Something like this. Hopefully we can get at least a 1 to 10 out of it. Not realistic, but we'll see. And this is still dropping. Like, I'm surprised I don't see red flowing through my screen speakers. Like, it just continues to drop. Like, I'm surprised it's not boiling out of my desktop the way that it's been dropping. And I got spiked out, excuse me, and each of my trading accounts, I've had slippage because of how rapidly fast the market has been dropping. Like I only wanted to risk about 1.5%. I ended up risking about 2.25%, which is almost a whole percentage more than I wanted to risk. Isn't that crazy? That's ridiculous. I'm only 0.25% off of risking a whole 1% more than I was willing to risk just because of slippage. So you got to be mindful of things like this, and this is why you don't want to over risk because there's other factors that you want to factor into your trades, which are things like slippage. Isn't that wild? I mean, it's the life of a trader, so can't complain at the end of the day. Not too bad of, not somebody on the path of being just completely independent. But yeah, that's my S&P 500 idea. Here's gold. I think that gold is gonna continue to sell off. I just feel like it's retracing to somewhere in this area, and then I feel like we might come back down. So we might pull up a little bit, sell off, and then I feel like we might make our way down to here, maybe somewhere, fill in this imbalance right here. We get a market structure shift, take price above. This is my idea. So I feel like gold is gonna be bullish soon, not yet, but soon. This is a daily range, so that's why I feel like that's gonna happen. We're in a daily range, I repeat, daily range. And then also look at how much imbalance is here. Like there's so much insufficient price right here. Um, Too many buyers. I just think there's too many buyers in this area, not enough sellers. Um, so yeah, that's that's that. Let's look at the weekly time frame. Not that it's that important. See, like, I mean, look at this. It doesn't even have a can like a wick. So next week we might create a wick to fill this in, maybe 50% of this candle, and then push back up. Overall, we've been bullish for a while. We've been bullish only like we've only seen bullish candles since like what is this? Since August. August. It's been about 3 months. About 3 months that we've only had green candles, right? So yeah, that's an idea that's gonna be highlighted light blue. And then we've got NASDAQ, of course, selling off as well. And what I'll do is just measure this. I'll put 50% of the daily range and Then I'll look again for about a a common key level for the daily time frame. This is only about two candles or two daily candlesticks, but if you look at the 4 hour time frame, it kind of looks a little bit cleaner for where price typically retraces to or resist against. And instead of me putting an alert at the 50%, I would just effectively use my alert to highlight around this area. And most likely, once area gets retraced to this zone, um, it's probably gonna touch the 50% or not 50%, but the 50 EMA. This is a 50 EMA, right? You can see my indicator just to show where, um, buyers and sellers are meeting to agree on a price of either buying or selling the market long term. Um, or maybe a short amount of time, not long term, but that's just an example. Then let's look at oil. So I was looking to sell to short oil, but oil unfortunately didn't come to my area of interest. So I ended up missing out on the trade. That's fine. There's always going to be more opportunities. What I'll do is I will pretty much just move that there. Honestly, oil gives me not the best trade setups, but it's still not a bad idea to trade something like oil. Here we go. Let's just highlight this area right here. Not the best setup, but silver is not exactly bullish yet, unless price closes under this wick here. So price closes at 47.010. We're gonna get, we're gonna be able to confirm, or I would personally confirm that silver is bearish. Until then, I'm still gonna say that silver is bullish. Um, yeah, but I mean, silver is kind of everywhere right now. I don't know. It's just I don't really want to trade silver yet. What I will do though is I'll put what is this? Eh, I'll just leave this line here and then I'll put daily low. And then this is US 30. So effectively US 30 is let's look at the monthly daily time frame. I would indicate that this is the daily low right here. And I would say if we look for 4 hour time, maybe 4 hour imbalances, you can see that there's one, two, maybe three, but this already looks like it was mitigated. So I'd probably place this here so that we can start looking for potential opportunities. Because if we start like, it's still overall bullish. I would consider this as overall bullish, unless, yeah, I would still consider this as overall bullish. Honestly, I don't even want to look at US 30 right now. I'm just gonna keep them all under do not disturb because anything that interferes with me considering maybe it's bullish, maybe it's bearish, I'd rather just stay away from it. So these are the only three pairs that I'm going to be looking at in terms of indices and commodities for the next week, 2 weeks, 3 weeks, 4 weeks, 5, 6 weeks, and that's pretty much yeah. Hold, hold on, guys. My assistant's calling. 1 second. All right. Yeah, so that is pretty much what I wanted to go over. Um, this is literally what the fourth week that we're in profit. The fourth week of being profitable. Isn't that fantastic? I think that's a milestone. That's an overlooked milestone. Yeah, but the market is now, I think it's closed now. 6595.25. Yeah, it looks like the market's closed now, so we're bearish. Looks like it. Yeah, I think we're bearish, and that's something that I will trade with. I'll trade with the trend. If the daily indicates it's bearish, I'm gonna go bearish only. If the daily indicates that we're bullish, I'm only gonna trade with the trend in the bullish direction. I won't go against the daily time frame. I'm just saying that's a part of my strategy and it's working so far, so I'm gonna stick with what's working and I won't go against what's not working. I won't go against what's working. I had to think about that one for a second. Um, so yeah, this is what this looks like. Hope you guys learned something. I had a quote I want to share with you guys. I could have sworn it was on a different page. Hmm. It is never okay, so this is in Market Wizards. So William O'Neill, he was he was asked, okay, you use your cancelim, which is a strategy he has or methodology for selecting stocks, and he's and your 7% rule for getting out if you are wrong. How do you decide when to liquidate a winning position or stock position? So he says first you should hold the stock as long as it is performing properly. Jesse Livermore, if you guys know Jesse Livermore, he sometimes I think even risked about 50% of his account's equity. Um, but yeah. Jesse Livermore said, in quotes, "It is never your thinking that makes big money, it's the sitting." Let me see if I says second, you have to realize that you will never sell the exact top. Therefore, it is ridiculous to kick yourself when a stock goes higher after you sell. The goal is to make substantial profits on your stocks and not be upset if the price continues to advance after you get out. So, or effectively what Jesse Livermore is trying to get across as his message is that don't beat yourself over the fact that you didn't get in at the very top to sell off. Don't beat yourself on the fact that you didn't get in at the right time of the bottom in order to successfully trade, from the absolute bottom to the absolute top. Trading with the trend is very financially effective, and if you're doing it properly and with the right risk management model. And he's also saying that sitting out of the market is also a move. Trading is not always the best move. It's also okay and profitable to sit out of the markets because if you have capital, having capital is better than not having capital. You don't want to blow your funds chasing trades and no longer having the capital to trade at the right times. Because if you lose all your capital and you have nothing to trade with, that's a problem. So so you have to also think about the problems you have because everybody has a problem and I'd rather be the one with the problem of not being in the trade, not being in the market, not being a participant versus being the one who's always participating and running out of funds to participate. So just think about that, and I hope you guys learned something new in this video of the second video, part two of the aha moment. Um, thank you guys for thank you guys for watching. I hope this has helped you. It's helped me tremendously, and like, comment, subscribe, join my Discord, and thank you guys for watching. I hope you guys enjoy your weekend. And yeah, peace.